I'll keep doubling, you keep bluffing. You've got nothing, I'll keep hustling.
Welcome to Crypto MC, everybody. Yesterday, we were looking at Bitcoin and we said to you guys, well, we've got a really big bearish count in mind, but because it's a lateral trend, we're going to be bullish. Is that right, Lee? So,
no, we said yesterday at the hi everyone, but we say at the beginning it was more for clickbait, no?
Yeah, kind of. Like, look, we don't want to fall into clickbait, becoming clickbaity titles, but yes, that was the idea. So let's quickly have a look at this Bitcoin buy. So we explained to you guys that I wanted to try and get this buy-in at this level here, and it's off the demand zone buy that I was looking at. Now my controls are all frozen. There, off the demand zone buy that I was looking at over here. And then what I did is I opened up the support resistance tool and I showed you guys where the support is at. And I explained to you guys that's why our stop limits needs to be here. Now, Lee, the support resistance really covered our asses with the long, wouldn't you say?
Yeah.
Otherwise,
yeah.
Most people got shook out.
I use that line. I use the 18.2 line. So this is where I load on my order yesterday. And yeah, with less than $100 stop, so everything's ticked in, luckily. And now took a little bit profit, a lot of profit actually until this morning.
A lot of profit.
I can maybe share that chart on Bitcoin, why I decided actually to take profit using also that indicator, maybe at the end of the show.
Yes, let's leave that for the end of the show, and then we'll take a little further. So, guys, you like the content? You made some money yesterday. Hit the like, hit the subscribe button, and yeah, let's continue on. Lee, as a bonus content, you're also going to be sharing some reasons why this breakout that we're talking about, that why this breakout is different. We're going to also be looking at invalidations. Remember, guys, we're planning for contingencies. At the end of the day, crypto can do one or two things, or Bitcoin can do one or two things, realistically. It can go up or it can go down. So you only need to plan for two scenarios. How easy is that? Or easier said than that, I would imagine. So we're going to give you 5 good reasons why we think this breakout is different. But we're also going to give you a few additional contingency you need to keep in mind in order to make sure that we don't end up trading with a bias, because once you have an idea that it's definitely going to go up, that is when you normally get wrecked. Okay, that being said, I'm going to bring up the DXY. I want to quickly show you the DXY. Now, why the DXY? Funny enough, now we've been looking at this thing from a big picture point of view on the weekly, and if we were to zoom out, this is a target that we've had in mind for, I don't know, since forever. When we drew this target when we were down here, sorry. We were looking at this area and I said, well, look at the inefficiency. Once price left that range, that can be a probable target. Now, please note, we did have different targets on our way up to that area. And as they got invalidated, these targets, that then brought that one into play. So that's just the way that price action works. So we've got the 3 divergence, or the 2 divergences. I don't know why I see 3, or why I feel like I want to say 3, Lee. But yes, we do have the 2 divergences in mind, because there we start. There's the first one, and there's the second one. So now we've got the 2 divergences that's playing out. Is this the makings or the beginnings of a lateral trend? Fibonacci, Lee, what do you have for us on the DXY?
DXY in itself, not really, but DXY is US dollars, right? So I'm gonna, try to find out the US dollars, if it is strengthening or weakening against all the other major Forex pair out there. So if we look at here, I've got Aussie US dollars on a weekly chart. So this time it's going to take a lot of time for this candle to print. One candle equal 1 week of time. And if you look in the past, in March 2020, we had here a big demand area with a little bit of gap here. Within this week, what we have done, we went, fill this gap, fill this imbalance area here, And that's why I was expecting a reaction, at least a strong reaction based on this area in the past to the Aussie dollars. Okay, so Aussie dollars was losing its strength all the time, and then last week I was expecting a little bit of a bounce due to this support area. If we go to Euro US dollars, we know that Euro has been taking a hit against US dollars quite heavily, and same on that weekly chart. Within this area here, you have a double bottom. We have a huge rally after that, and now what we did, price come back to this imbalance area support as those level here. There's another support here. So that's why when we touched this area, I was expecting Euro to regain a little bit of strength against the US dollars. So US dollars again is weakening compared to the Euro at that stage. I mean, on a smaller time frame, we were just counting on a reaction, and that was also in the past in the chart, weekly chart, May 2002. When you go to GBP US dollars, GBP was all-time low 2-3 weeks ago. That is again a weekly chart 3 weeks ago. Now, if you go to a daily chart, what we have done, maybe this is a reversal. Daily come back. The daily chart made the higher high, retrace where to 50% of the whole move. Okay, 50% natural reaction for anything to bounce at 50%. Maybe it's gonna come back to 61876, maybe not. So 50% a nice reaction to the upside. So that's why 3 days ago, I was trying to long all those big currency against the US dollars. New Zealand dollar against US dollar, same. On a weekly chart, you have a big gap, a small gap, sorry, and a big support area. We went back down once, and now what we're doing is just to come back again to fill those wicks. Okay, 50% of the wicks stop at the bottom here, even below. There is also like a big, demand area. So all those area is showing me that US dollar must take back a little bit of this, move, and lose a little bit of this
all points
trend.
to weakness, because if this is all support, what do we have with the weakening DXY?
Well, exactly. So DXY is weakening because it's touching all those big currency pair support. And if you turn the chart other way around, this is US dollar, Canadian dollar. Okay. On the other side, US dollar here is also losing his strength, weakening, because why? On a weekly chart, we're coming back to the 618.76 reload zone. So inside this reload zone, and if we close this daily like this, we're probably going to have another divergence, the daily divergence here. So that US dollar is going to get weaker compared to the Canadian dollar. And finally, I'm going to end with that. This US dollar, Japanese yen, the yen again, and then on this daily chart, we have a big divergence playing out from that level. That was a weekly divergence. Sorry, weekly divergence. I'm going to put back to weekly. Yeah, if you look at RSI here, weekly divergence printing out higher high, lower high in RSI, higher high in price. And if you look at the daily charts as well as weekly, you can see those orange, crypto EMC, ALGO buy and sell indicator flashing orange, red, and we are right now inside this area where price should have at least a reaction, maybe not a reversal, but at least a reaction. So we are in my mind, we are at the critical stage for US dollar to get weaker for the coming weeks.
Okay, guys. So first reason, DXY giving us on the weekly bearish divergence. Similar bearish divergence that we had when Bitcoin was in the 60s going to the 70s. And everybody damn well felt bullish at that stage. So if you're the one fleeing to dollar still looks like the best bet. But the RSI is showing us the opposite. And this is now being supported by the fact that all the fiat currencies that's been taking a pounding because of the dollar going so strong, the interest rate of the dollar being exported to all these countries, and them having to take the same action by increasing their own interest rates. They are reaching a point of support. So if we were trading and we want to trade this, that would be the goal. They are in brilliant buy zones, which confirms the fact that where DXY is, DXY starts selling down, they start holding their support levels and start buying. It's really good for Bitcoin. That's maybe why this breakout is different. As well, Lee, the stock market. What is happening on the stock market there, buddy?
Yeah. S&P 500 as well. the most important one in my opinion, compared to, that should be correlated to Bitcoin. From this March 2020 low to the top, we come back, retrace to 50% of that fib level. We literally tagged this price here. So that, again, another natural reaction, 50% reaction down, we should expect a bounce. On a smaller time frame, if you look, on a smaller time frame at some kind of pattern, it's weird that on this chart is not showing me that it tapped exactly at 123, but on other chart on S&P 500, I think this move here come back, and if this is a little bit of Elliott wave now, if this is a 1, 2, 3, if that is a fourth wave, fourth wave is still not done, or if it is done, at least we have a natural reaction, I would say, as well, at 123 level of that fib level. So we went, there's 50%, 123 level to provide kind of resistance area in this at this level. And since yesterday's drop, we had a pretty big reaction on the daily chart. Maybe that is a reversal, and if that is a reversal, I would guess we can easily go back to this 39, 65 around area, or 38 at least. Try to make a double top here again. So for the coming days or next week, I'm also a little bit bullish on S&P 500.
Okay, so now third idea, S&P 500, we're a little bullish. And to be honest, Lee, the previous run that we had, you called that one to the T using the similar analysis in the end of the day. And it really played out well as well, guys. So just keep that in mind. I've got a comment here that I want to ask. So a question here from Mike. Why are there 3 boxes in that buy-sell indicator? Now, Mike, I want to ask you to just head over to this video yesterday, 2 days ago that we created. These are the trading indicator videos where we actually take time to explain why the buy zones and how these things work. You can actually find a lot of info in there. And the reason we do this now is so that we don't get sidetracked from what it is they actually want to show you guys today. So we'll be looking forward to seeing your comments in that video, whether this was helpful and whether it answered that. That being said, I'm going to show you something a little bit different and something that you don't see that often. Now, I'm going to be tracking divergence between the S&P 500 and the US 30, which is the S&P 500 top 500 companies, where the US 30 is the top 30 companies. Now, why do we do that? Similar way, we want to see an overextension of one on the other, meaning if there's bullish divergence between them, then you know that there's something boiling. There's momentum somewhere that people are not picking up on. So I'm going to show you this chart. Now, the way that this chart is set up, the green line is our dollar. It's the DXY. I've got the label there to the right-hand side. And then I've got the Dow Jones, or the US 30, which is the gold chart, or the gold line. And then I've got the S&P 500, which is the red line. So for this instance, I'm just going to switch off Bitcoin and let's just make it a little bit cleaner. So when we see a big price movement like this, the Dixie took a pump down, you see that the markets rallied up, meaning money left the dollar, it went somewhere else. And subsequently, so these are pivots that we want to try and keep in mind. Now, as you can see, as price left there was harmony between the Dixie and the Dow Jones and the S&P 500. But now when we continue on with this and try and have a look at these pivots, so now you can see the lows, and what I've got is, why I use the line tool is it just gives you closing price. I just want to see where the agreement was on. So if I look at this last pivot over here, from this point onwards, I've got the US 30 or the top 30 companies performing better, closing higher than the top 500 companies. And these companies are within this list. This has just got a broader scope. So in actual reality, this is our first divergence between the S&P 500 and the US 30. And as you can see, when we have the next divergence, there's another one where we didn't make a lower low than the original pivot, and yet we made another low. There's another divergence calling in. And this all supports the fact that the S&P 500 looks really poised for a rally, because the US 30 is already showing that there was strength in this buying, and it's on its way in the continuation. And currently today, the market has not opened yet. We still want to see whether there's going to be any bearish divergence, meaning the S&P the US 30 rallies up and maybe the S&P 500 closes down. But until that happens, this is a really strong trend in the making. So there's a fourth reason why this breakout can be completely different. Now, the last reason I want to bring up to you guys, and this is our dear friend Wyckoff. Now, there's 3 laws within Wyckoff. Lee, how many hours have we spent on Wyckoff? Have we mastered it?
I have spent definitely less than you. So, luckily I've got you. So if I have any question Wyckoff, I'm just asking my trade buddy.
Well, the reality is I'm
far from mastering it.
But the principles behind Wyckoff is to study lateral patterns. Patterns, that's just sideways patterns. And when you study these sideways patterns, like you see over here, the goal is to see where the 3 laws come into play. The law of supply and demand, effort versus result, and cause versus effect. Now, this little schematic puts it in nice perspective. Accumulation, you build a cause. This is why we're moving lateral. And then when we break out, the effect, the amount of gains will normally be proportional to the amount of accumulation, cause that was built. Okay, and the same then for a bearish scenario. You might be building a cause, trading sideways, and once you break out, the effect, the move down, will be proportionate to the amount of time spent in that lateral range. So if we think about this and we start thinking about Bitcoin as lateral ranging, can you see that we've spent a lot of time here? This was June and this is October. It's almost 4 months of ranging. So if we were to break to the upside, which is still early days, but this is another reason why this can be different. With the fact that we had this long accumulation, we can expect some good targets. If we break to the downside, with the fact that we've been moving so long, we can expect some low targets. And that's why I like the bearish thesis that Lee explained in this video yesterday, the most bearish Elliott wave count, because that then is our plan for that. Now, that's still a lot that needs to happen before that account really comes into play. But it's just something we want to share with you guys. So to sum it up, 5 good reasons. First is the DXY has been printing bearish divergences on the weekly. Good for us. We know that Bitcoin moves in the opposite direction. So that is a supportive thing. We've got the fiat pairs that's sitting in the opposite direction, showing support levels and some divergences. Really good reasons for those pairs to have money flood back to them. So traders will be moving their dollars into these fiat pairings. We've got the S&P 500 sitting in a sweet spot area, plus it's got bullish divergence, as well as divergence between the S&P 500 and the US 30 that gives us confluence. And then we've got the Wyckoff range as well. So there's enough reasons to now say maybe this breakout can be a little bit different. But okay, before we look at the bearish point, the way that we start covering our asses and planning for where it goes long, because you might not be in the long, so please don't just jump into a long willy-nilly now. And we're also going to be covering this with a short. So before we do that, please hit the like, hit the subscribe. And then I'm going to ask Fibonacci Lee to bring us the US dollar dominance, because USDT dominance, because we want to make sure that money is actually going to be moving. And we want to know early enough whether we should abandon this bullish thesis. So over to you, buddy.
Well, you can add another reason why this rally is different. US dollar dominance also went to 618 retrace area, reload zone, retrace from this move down. Price went back up. And we're planning for this move anyway from September already. That has to go up. Little bit of retrace, and then has to go up within the 618-786 zone. So yesterday we tapped inside, and then straight after that we had a huge reaction to the downside. So that was also calling for a little bit of more bullishness in the Bitcoin price action.
That's true. So what needs to happen here for you to change your mind, though, Lee?
Well, it went back. We're testing again this 50% level. Okay. So for now, I think it's consolidating in this area. So that's why we are not doing anything right now at that stage, other than waiting for another long entry or waiting for a short entry and taking profit. So to me, on a swing level trade, there's no trade at the moment. We are
Okay,
literally
yes.
in the middle, so there's literally no trade.
Yes. And if it were to break to the upside, go and make another higher high, that would be a first reason for us to start worrying, because then this US dollar dominance, USDT tether dominance, can really start getting some more momentum backing it. And then that's going to spoil the works for us. And hopefully, if that happens, we'll have a short ready, isn't it?
Yes, that's right. No, if it goes up, you better long it. If it goes down, you short it. So if it goes up like this, price is gonna go down. So you prepare for a long. And if you break this pivot here, I would say 7.26%, then you should look for short.
Okay.
Am I right?
I'm thinking we want to say the same thing, but I'm talking the left way around the tree, and you're talking the right way around the tree. You guys in the comments on the other end of the screen, let us know in the comment section if it makes sense. And for those that actually watches us not live, please send us your comments as well. I love to read them and I love to reply to them personally. Fibonacci leaps. Say there's something goes wrong with your fiat pairs quickly. Is there additional support levels that can maybe save us, or certain draw the line no further?
Definitely. I mean, we are not guessing the bottom or the top. I was just pointing out some kind of reaction level, but on those Aussie US dollars here, I mean, the demand zone is still at one level down. Okay, so that was only the imbalance. If they want to go to this demand zone, there's still a leg down here. And Euro USD is same. We just went up this imbalance area. The real support is reaching, one level down as well. You can go back to this imbalance area a little bit more, one or twice, 2 times more on that. I think, GBP USD, that was only the 50%. If that reaction is not strong enough to make a higher high, you can easily come back and, try this hidden demand zone here, or, one of the 618.76 level to the downside. So basically it's just a reaction zone. We are still fighting. The battle is not won yet. Maybe they will have won one battle, but the war is not won yet. So exactly for the same for the New Zealand dollar, it can still go down. Those white lines that I've marked, those are really, really strong supports. US CAD as well. 7x6. Yeah, that's only the reload zone. I mean, we are expecting a reaction. What you want to see? You want to see, for example, from this inside this reload zone, some kind of double top forming with higher lows and breakouts. So that will look much better. But so far, we just try to guess where the top is, and that's the same for the US Japanese yen. We are just trying to guess where the top is. You can go through this box, but what you want to see now is just having a double top and then lose momentum to the downside. That will be good for the risk on assets.
That's it. So guys, it's easy for you to track it on your own. Go and watch this video again, a winning indicator, and it will give you an idea of what you want to see printing and how it should print in that area for that to actually happen, especially if you're going to be tracking this over the weekend. Now, additional things that we need to consider. I'm going to bring up the screen and I want to show you this. Ethereum. If Ethereum is not going to join the party pretty soon, this is going to spell bad news for us. So then this breakout's going to turn into this big fake out that everybody is expecting it to be. And I saw Matty here saying that 12 to 14K is not bearish, more like a once in a lifetime buying opportunity. And I really like the angle the way that you're presenting that, buddy. But the reality is, if Ethereum doesn't start igniting some momentum into this previous lateral range that it lost, that's going to spell bad for us. So I want to see what Bitcoin does in the next day or so. And Ethereum needs to start waking up now. We did have a good shaking event, but we haven't even created a high. So this is very bearish and very negative for us at the moment. And then lastly, if we were to look at this from a bigger picture to try and see and gauge where the rest of the market is at. If we look at Bitcoin, and I'm trying to just point out where the lateral ranges are. So that is the formation of Bitcoin's lateral range to the right-hand side of my screen. I'll make it nice and big so you can see. Just want to delete that arrow. Make it nice and big so you can see. Now, if I do exactly the same, it's printing the total market cap on the top right-hand side of the screen. But you can see that this one moved differently. We already created a lateral range, broke out, created a secondary range, and we fell back. And that's what creates the uncertainty in the market. because the one is holding levels and other ones are still getting punished, and they still shake out events. The market's in turmoil. Now, if we look at the same for the altcoin market, the total 2 market, where we now take Bitcoin out of the picture, it's tracking the total market cap, the top right-hand side, identically almost than what it's doing with Bitcoin. So now the argument is, if I'm looking at Bitcoin and I'm saying to myself, if Bitcoin doesn't catch a hurry up and starts getting above this 20,900 to 21,000 level, that's where we would want to short this. Then that's why we still have this shorting narrative here that we've been sharing with you guys. I say, don't short too soon. There's the shakeout short for the continuation. So if Bitcoin doesn't get above this level, that's going to be bad. And in any case, if this trend is going to continue on an accumulation state, like we've explained to you guys here, this cause and if this accumulation cause being built, what I would want to see is I would want to see Bitcoin at least get above this 24,285 and stay there. If it doesn't do that, none of what's happening over here is going to be perceived as bullish at all. And that's then going to drive the market down. That's going to be our sinker. So we need to plan and we need to keep an eye on this. So this run needs to be successful. It can have multiple shakeouts still in this area, but this is the general idea that we want to pass on through to you guys. Okay. And that's going to all move this whole thing into a negative point of view. So just consider that. Now, Fibonacci Lee, we have been sharing a lot of fiat pairs and a lot of Forex trading pairs for that matter. We use Prime XBT because Prime XBT actually gives us crypto trading pairs and some fiat currency trading pairs. Is there anything worthwhile for anybody to want to sign up with Prime XBT or any advantage? You're muted, my friend.
I was saying, I think it's 2 months subscription fees to join our private membership in the Discord, plus those 2 indicators, if I'm right.
Yes. So if you scan the QR code in the top right and side, open, and all you need to do actually, let's make it. We can make it even simpler for you guys. It doesn't need to be so hard. All you need to do is just head up to the Discord. So if you head over to the Discord, here's the Discord QR code. Just scan that Discord code, go to the Get Premium Access, fill in this form. Now, this Google Sheet form looks like this. It asks you your email address. It asks you to sign up with whichever link, the sponsor link, the Prime XBT link. You say next, and then it's going to ask you just to make sure that you fund the minimum. This still stays. You're not losing any funds. You keep your funds within your account. Fund it with the minimum, and that's it. And give us the email address that you created that account with. We show you where to go and look for it, and your TradingView username. And once the exchange has given us a go ahead and said yes, this has been done, it's been funded, you'll get access to the buy sell indicator, the one with the orange boxes, and the support resistance indicator, the one that saved our asses yesterday with the trade, all for 31 days at no cost to you. So that's a really good deal, and that's why we like to bring these partners aboard, because if they can sponsor that access to you, how does it get better than that? Lee, yesterday we spoke Elliott wave, and I just want to quickly recap on that quickly. You had 3 videos. We've done 3 Elliott wave videos, and I just want to quickly show. The first video was the analysis that we're trying to play off now. So if you want to try and see it, remember it's big time frame counts. The videos are still current. You can go and have a look at them. And then we had an additional one that painted a little bit of a different picture. But then we had the big bearish one that I think everybody should be seeing now, or would go and see. So where we at with these counts? Are they still all in play? What's happening there? Can you quickly just shed some light on this? Yeah.
So the bearish count that we shared yesterday, even though I'm not really a fan of that count, is still in play, obviously. So the price can still drop and still go up lower low. But I'm just gonna say it again. I don't really fancy that count. There's a lot of area that I don't like. The bullish count, smaller time frame. What is happening inside this wave 2, where I was counting on more accumulation and drawing a drawing a triangle inside this area, that is no more valid. That is invalidated because of this drop. The drop that we had yesterday. so that drop is no more valid. For the simple reason is that this drop here, if I wanted to call a C, A, B, A, B, C, D, E, C cannot go below the A. Okay, so whether we put the A here or A at that level, we just went below this level by a few dollars. So even $1 counts in terms of Elliott wave. I don't think that any other exchanges has managed to make a higher low on that drop than this pivot here, at least from yesterday. But to me, that count is then invalidated. I need to delete those waves and then look for another count. But the bigger picture idea, where the bottom is in here at 17.6, and if that is the leading diagonal for the wave 1, the 2 retrace, that is still valid as long as we're not going below 17.6. So these 2 here or a little bit later is still valid.
So all our stops should remain safe from the first original buy up to now, because until then we're still fine. We can still be chopping around a bit.
Just a little bit of sneak preview. That is one of the really simple counts that I'm working on now, because it has invalidated the previous one. And we're going to talk about this next week. Need a little bit more candle. But if that is playing out, I'm looking at this big move going even above 20, 23, 24. That will be one of the ideal targets for this move to end.
I like that because remember, guys, it brings us back to the idea Bitcoin needs to get there in order for us to have any chance to say that this breakout is different. So I like that. I like the fact that we're going to be looking on that. Lee, I've got one thing I want to say out. I saw this comment now, and it was from David. But what about the bad CPI results? David, I want to take your attention away from the CPI for a moment and just look at something different. We've got an unemployment rate in the US now that is favorable. And this is actually turning into a negative now. Why? Well, they're going to keep on increasing the interest rates and start punishing people that live on credit and basically exporting, trying to cool down the economy for as long as it is going to keep people employed. As soon as people are getting unemployed because of it, that's creating an adverse effect. They don't want to make people unemployed, especially not because of election years coming and for various other reasons. Not everything they do is trying to be bad. So that's a figure. But now, because the unemployment rate is remaining strong and actually decreasing, it's letting them know that they can keep on increasing the interest rate because your pocket can afford it. And that's the bad thing. That's the thing that we need to keep in mind. And this thing just brings us onto this. I know it's still early, but everybody is now bargaining and planning for another 75 basis point rate hike, which then brings us into that 4% interest rate. So just keep that in mind. It's a completely different way of looking at it, because normally what we would do is there's a chart that I actually wanted to show you guys for the 2nd of November. It's kind of almost like a guarantee everybody's expecting that. But just keep that in mind. So the CPI is one thing to consider, but the unemployment figure is the one that we want to see going up now. We need to see people losing their jobs, or else they're going to keep on raising those interest rates. Okay, and then that's just going to bring the dollar back into play. It's just going to hurt everybody else. And with the winter coming in Europe and the expensive energy fees that's going to be added to them, bringing a stronger dollar is just going to hurt the rest of the world even more. And that can be, can wreak havoc. So we just need to remind and be mindful of that little number. So I want to see that coming down. Okay, CPI is only the excuse? Yes, from a trading point of view, definitely. Fibonacci Lee, next week, Monday, we're going to be looking at the weekly close. We will have had a weekly close, which is going to be good for us. And then we're going to be looking and hopefully finding that elusive big short. Remember, guys, I've got my shorts in, but I don't have that big banker that I actually personally, between me and you and Lee, I want to see it fail to make sure that the rest of my long-term bags go up. But I want to get that big banker, guys. And I want to be patient and have the right timing. So we're going to be showing you that. So don't forget about Monday's stream. It's going to be a good one. Fibonacci Lee, this is time for weekend, buddy.
I think you want to incentivize the people to short so you can have this short squeeze up to 23, 24K.
Yes. Let's see. Let's wait and see on that one, guys. But I want to say thanks for the week. Fibonacci Lee, see you guys on Monday. And then we're going to be looking at that. As always, it's weekend, low liquidity. There's a lot of movement. I would not venture jumping into specific trades unless I've got clear parameters on scalping and I've got a time frame concerned to it. Don't leave trades unattended, especially this weekend, guys. Lee, anything else? Are we signing out?
We can sign out. Yeah, trade less over the weekend. We have a good position now locked in on the long. If we have taken profit this morning because of this chart, I just wanted to show you that that is the chart I wanted to share with you. Let me know if you can see it, Rudo.
Mm-hmm.
Basically, this is the support resistance line. I think it was on a weekly time frame that I put some numbers on it. And that's why I decided to take profit when it hit those weekly major resistance line. That was the weekly major support line. So I think we're going to end up closing, during this weekend around within this range. And I will be happy to add more position if from that move down to that move up, if we retrace 50%, 618, the profit I've taken here, I will add at that, half level retrace.
There you got it.
So that's it.
Wait for the retrace. There you have it, guys. So thank you, Fibonacci Lee. We're going to continue on giving updates of these type of things in the Discord. Head over to the Discord and make use of the channel partners to get into the premium group, guys. It is there to make sure that we don't get those scammers in there. We want to keep it as a tight-knit group of like-minded trading people like yourselves. Cheers, everybody. Have a pleasant weekend.
Keep hustling.